Hey, what's going on, everybody? Welcome to another episode of Global Cap FX Technical Tuesdays. I hope everyone is having a great start to the week and you're out here killing it, crushing your goals at whatever you're trying to attain, right? When it comes to foreign exchange, how are your disciplines? How is your psychology? At the end of the day, we can all learn technical analysis, but when it comes down to it, this day trading thing is 90% psychological. But today we will be touching on that other 10%. That'll be the technical side of things. I have a couple of pairs that I would like to go over and show you my strategy. Uh, from a general standpoint, we won't get too in depth, but I want you to understand that, like, when it comes to day trading and locating your technicals, aka your confirmations, uh, while the market tends to move very fractally and very specifically, if you can locate extreme highs and lows and then also locate supply and demand zones, you'd be putting yourself in a pretty good spot from a psychological standpoint to stay within the trade, let your trade run. And then if you have proper risk to reward management, 2 to 1, 3 to 1, 4 to 1, 5 to 1 risk to reward, you will be looking pretty nicely at the end of the trade. Now, full disclaimer, this is not professional financial advice. Everything that I'm saying on this video is purely entertainment. I just happen to make money with it every so often. So everything that you take from here and decide to implement into your own strategy is done at your own risk. So yeah, so your wins and your losses, especially your wins, those are your responsibility. So I look forward to you guys continuing to following this YouTube channel, checking me out, because my goal here is so much larger than, the free course that I offer on the Global Cap FX website. We are actually going to be touching on that for just a second now that we've gotten that disclaimer out of the way. Next thing that is on my list here, speaking of financial advice, we are now officially booked for our first test 2 months out to have our series licensing for the United States, which means this stuff will eventually become financial advice. But in the meantime, disclaimers in full effect. So we have licensing, studying, and all that good stuff taking place right now as we speak. I'm about 25% into the first piece of study material. So I'm very excited about that. Very excited about being able to bring some additional value and some additional knowledge to my watchers, to my students, and then also to my traders when it comes time to having the GCFX proprietary firm and hedge fund within the next 3 to 5 years. So next thing, for all of the new students that have joined, congratulations and welcome to the course. Obviously, this course is done at your own pace. We have about 12 to 15 hours worth of content that you can watch from A to Z, allowing you to, if you're brand new, start fresh, right? You start at the very bottom, learn the bare bones before you get to the meat and the potatoes, as they say. You start at the beginning, work your way all the way up to the end of the course. Now, when you're done, the cool thing is that we have a Discord group community chat. So if you are still uncomfortable doing trades on your own and you would like to get a second opinion of your technical analysis and your markups, our Discord community chat is always a good group to get involved with, because we are tearing the floor in half, okay? And it's only going to get better. So I'm very, very excited for the students that are already in. And if you haven't joined the course yet, the link to the free course is down in the description. It's not going to be free forever. I am thinking about removing that free offer for quite some time, at least for the next 6 to 8 months. So if you are not in that course and you are a trader and you like value, what are we doing? What are we talking about? Hurry up and click that link, and I'll see you on the inside. All right. Now, for my students who are already involved, After you have finished the course, after you are involved in the Discord, after you've taken a month or two of demo trading and implementing the strategy that you learned from my course, then the next step there is for you to get funded through a prop firm. Now, while Global Cap FX is not underway yet with their proprietary firm, I do have some firms that I certainly recommend because I have been paid out by them in the past. One of them being is FTMO. Highly suggest that if you are interested in getting access to a large amount of capital that chances are you might not have in your savings account, I highly suggest FTMO. They're a great company. They pay out on time within the next 2 to 3 days of you getting an invoice. So I highly recommend them. Good company based out of Europe. Now, for those students who eventually get funded, obviously you'll start getting paid out as long as you're consistent and disciplined with your trading strategy. Again, this isn't financial advice of any sort. When you start winning and you start making your money through these prop firms, by that time, the expectation with Global Cap FX is to have our incubator firm where you can ultimately become equity partners. That's right, I said it. Equity partners of the company. So if we have a big pool of money, $100,000 total in the incubator pool, right? And let's say you decide to put $10,000 of your own money towards the incubator. All contracts are signed, all agreements are put in order, rules and regulations, exit strategies for both parties are agreed upon. You have now 10% equity in the business. So any profits that are made going forward with that money, you would receive 10% on that profit, if that makes sense. Okay. So any students that are involved and your next step is to get funded through a prop firm, lock in on your demo, show profitability by utilizing your journal. If you don't have a journal, send me a comment down below and I will reach out to you and we can connect and I can give you a journal that I've been using for the last couple of years. Really good journal. It has nice drop down menus on an Excel sheet, Google sheet. So I highly recommend using that if you do not use a journal. That's the best way that you can improve your chances of becoming profitable on the market. So if you need it, holla at me. Okay, so now what we're going to do is we're going to tap into these charts really quick and see what we have from a technical standpoint. Let's get into it. All right, so the first one that I actually want to look at is GBP JPY. That's Great Britain paired up with the Japanese yen. Now, what I teach, I'm not going to go through the whole spiel when it comes to the course. That's why you need to go in there and stop being lazy and get in the course. But ultimately, my strategy is really surrounded upon supply and demand. Every single time frame that you go into, whether it's the monthly, the daily, the 4 hour, the 15 minute, there are supplies and there are demand zones. Okay. Your job is to locate these zones because based off what happens in the past, there's a good shot that the same thing can happen at the current price. A great example of that would be will be this first area right here. Okay, you can see that price has a tendency of pushing back to the downside in a strong manner whenever it gets in this zone. And the reason why I put a box around this last black candle is because one, it's the final move up before an institutional move down. And when I say institutional, I mean big volume, big movement. And then on top of that, this big movement broke through a support line right there, give or take. And With that being said, price shot back down, created some new lows in comparison to, the 160.000 and the 160.400, created some new lows, eventually came back up here, liquidated this previous up candle before the down move, liquidated it, absorbed any stop losses that were above that area. So let's say you got into a trade right here and you had your stop loss right above that, right? And you had it to the downside. And let's say for whatever crazy reason you decided to leave your trade in and you let it come all the way back up. Okay. Well, if that was the case, you got stopped out. Okay. Now with this right here, I look at that as market liquidation. Price needed some more volume, some more money, some more stop losses collected before it can actually continue down and go further down in price. Now it's been taking some time, but gradually it has been making pushes to the downside. So I'm going to go ahead and make some other demand zones here. Okay, so we have this area right here, right? We have this candle right here before the down move, pushed out, broke out, broke out below this area right here. I'm going to go ahead and find some commonality here. Broke below that area right there. Came back up, retested with this spike to the upside, coming back into the order block, which is this final up candle move, and then continued down. All right, so as you can see, we are breaking and retesting areas where price had trouble initially breaking through. So this area right here used to be a support, used to be a floor, and then we broke through, did a nice little retest of the order block that initially caused the breakthrough, hitting this order block. Some people call it engulfing candlesticks. Some people call it order block. Some people call it institutional moves, candle rejections. I think I just said that. But yes, so price pushed down again. Boom. This right here, this right here can also be a potential area of interest. And as you can see, price has been having trouble breaking through this area. We've created, if I went down to the 1 hour time frame and gave you a better look, you can see that price has trouble breaking through this high right here of 162.7, coming down, creating some form of support right here, okay, and then finally breaking through and staying through, pushing down further. So in this scenario, I would really like for price to come down and meet these lows that it created back on August 22nd. I would prefer that to happen. For those who like the strategy of problem reaction solution, okay, the problem in this scenario would be this sideways movement right here. So that's the problem. We don't like trading and consolidation. We want price to come out, break out, maybe even come back into a supply zone if our bias is a sell. Okay, if we're looking for a sell, we're looking for price to come into a supply zone so that we can sell off on that and sell off on supply. So we have a breakout of the problem. This was the problem. Breakout came back into an area of interest where price has a history of breaking to the downside. And now we look for setups. And usually setups can be, if you like M and W formations, in this case an M, you'd be looking for a double top, triple top even. You would also make sure that, if you also want to make sure that you see price breaking out of structure. And when I say structure, I'm talking about this line right here where support was established and then we broke through it after the breakthrough, we should be looking for maybe a retest back into this general area here and with a potential continuation to the downside. So I would have my stop loss, my entry somewhere in here, stop loss, stop loss above this high right here, because this right here liquidated this, came back and retested this block right here before the push down. So this is a nice little area of interest in my opinion. Now, going over into the risk to reward management, we have an 80 pip stop loss. I would like to see at least a 2 to 1, and we do accomplish that, 2.28 to 1. So in my opinion, I think this is a solid trade to get into. Now, when it comes to your stop loss placement, I like to have my stop losses above, since we're looking for sales, I would like to have it above the previous impulsive move down. And if we were looking in the 1 hourly, this spiked up and then immediately came back down. So I'm looking at this area right here. Go ahead and highlight it. So this was an area of support right there. So the first time that price actually fully left and came below this blue box was here, this area. I would like to have it at least up here. Obviously, since price spiked up right here and came back down, we're going to have our stop loss above that point. We have some lower highs being formed right here. So I would look for this to short, hopefully by the end of this week. So we'll see what happens. We have some news, I believe, coming up. Let's see. Economic calendar on myfxbook.com. This week. Okay, so there's not much Great Britain news, but just because there's not much Great Britain doesn't mean that the price will just stay still. It still will float up and down, and liquidity will be absorbed, and then price will start moving in its given direction, et cetera, et cetera. Let's go ahead and come back to the charts here. Another one that I am keeping an eye on is USD CAD. I'm looking at this supply zone right here as an area of interest. I think that when it comes to retesting, price can sometimes go all the way back into the zone. It can exceed the zone and then come back in to set up and start trickling down. Or it'll just mitigate an area that wasn't filled. And when I say wasn't filled, I'm talking about this area right here that didn't have any wicks in between it. Okay. So this whole area right here didn't have any wicks, no retests of any sort. So when price comes back into this area, it allows large banks and financial institutions to take any of the buys that they have, which those buys were fooling retail traders to get into buys, thinking it was a long, took their stop losses out by selling, but those buys for the banks are still in there. So that's when you have price doing this, okay? It breaks down and then eventually it has to come back up so it can break even on those buys, and then it'll start continuing back down. So that's what I'm looking for there. The supply zone here, I would say, is pretty solid. We're going to certainly pay attention to this area right here as an area where price could potentially keep pushing up higher. Because if you move over into the daily time frame, we can see that there's a whole bunch of space in here that could be mitigated, filled in, however you want to say it, creating a double top and then pushing to the downside. So we'll see what happens there. If it does, if we got into a trade in this scenario, we'd be looking at least a 70 pip take profit with, again, we'll put it above the impulse here, the final up move right here, and we would take it at a 57. So that one right there, personally, I wouldn't take it because it's a 1-to-1. It's not a 2-to-1. So I look for at least 2-to-1 risk to rewards. If I don't see it, I won't take it. The biggest thing here, like when it comes to these technicals, man, is like when you figure out your bias for a chart and you find your confirmations, the very last thing you want to do before you get into a trade is make sure that your risk to reward is beneficial to you. So if it's a 2-to-1, you can only be wrong once, and that second time you have to be, you have to hit that 2-to-1 reward aspect of that ratio so that you can come out on top and have a profitable week. That's why 1-to-1, you're not really giving yourself the best odds. You can't be wrong at all. So if you have a 2-to-1, a 3-to-1, you're increasing your capability of being profitable by the end of the week's time. So the final thing you want to do before getting into a trade is ensuring that your risk to reward is solid. Okay. All right. So I think I'm going to leave it at that. I don't want to make it too long. I've gone over quite a bit today. Just as a quick recap, I am studying for all of my series licensing over the next 6 to 12 months. The first test is going to be 2 weeks out from today. Very excited about that. All new students, make sure you bang through that course, get involved in the Discord. And once you do that, we get you set up with your demo account so that you can practice making sure you're profitable. After that, we'll make an investment into a prop firm so that you can get funded after passing a challenge. Once you start getting paid out, keep in mind, Global Cap FX is planning on having an incubator firm where you can have part ownership through equity and receiving profits in that manner. So make sure you're putting money aside to get in on the ground level of something very, very big. Series licensing, proprietary firms, incubator firms, which will turn into a hedge fund. There are some big things coming here for Global Cap FX, and I'm very, very excited for people who get in early. Again, the course is free, so there's no point in, waiting on something that will eventually cost you when you can take advantage of it now. If you're someone who is trading and you're not profitable yet, chances are there are some little things within your strategy that you might need to remove and replace with some other things. And then obviously it's really important to make sure that you're dealing with a trader that you are comfortable with and you learn well from, because chances are some of you might not even learn well from the things that I teach, and that's okay. But the biggest thing here is giving the course a shot, making sure that I'm not that guy for you. And if you are, great. If not, no big deal. So yeah, I hope you found some value in this video. If you did, please like it, leave a comment, let me know where you're watching this from, and I will see you on the next video. Y'all stay safe. Peace.